The current price for NUBURU, ticker BURU, is 51 cents per share, representing a sharp intraday drop of approximately 14% as of 11 a.m. EST on May 11, 2026. While many investors were looking for a stabilization around the 50-cent mark, the reality is that the selling pressure has intensified this morning, creating a massive gap between the retail hope for a bounce and the institutional reality of high-frequency liquidation. Most people looking at NUBURU right now see a penny stock struggling for air, but the actual tension lies in a recent series of high-power blue laser contracts that haven't yet balanced out the immediate need for capital. You might expect a company with proprietary technology to be a safe bet for a buyout, but the reality is that the market is currently punishing any small-cap firm that hasn't achieved a self-sustaining cash flow, regardless of how many patents they hold. Standard market narratives suggest that NUBURU is just another speculative play in the industrial laser space, but when you look at the trading volume today, something else is happening. We are seeing a high concentration of sell orders that suggest a specific type of institutional exit, likely tied to broader de-risking in the tech sector. This creates a fascinating psychological floor. If you think the price is low now because the technology is failing, you are likely missing the point. The technology is actually gaining traction in niche defense and energy sectors, yet the stock price continues to slide because the cost of debt is weighing down the balance sheet. This creates a classic expectation versus reality trap. The expectation is that good tech leads to a good stock price. The reality is that in a high-interest environment, even the best tech can be a victim of a bad capital structure. If you are using platforms like interactive brokers or checking your positions on the Robinhood app, you've likely noticed the volatility spikes. For those of you active in self-investing, this kind of movement is where the real education happens. Comment below and tell me how many shares of NUBURU you are currently holding, or if you've decided to move your capital into something more stable like Nvidia stock or Apple stock today. Seeing the community sentiment helps gauge whether we are at a local bottom or if the retail crowd is finally throwing in the towel. The trading activity over the last few hours shows a significant amount of stop-loss hunting. This happens when the price dips just low enough to trigger automated sell orders, which then pushes the price even lower. For anyone using a Fidelity brokerage account or managing a SoFi active investing profile, these sharp drops can look like a total collapse. However, the volume hasn't reached capitulation levels yet. We are seeing steady, grinding downward pressure rather than a singular panic event. This suggests that the market is still trying to figure out the fair value of NUBURU's intellectual property versus its immediate liabilities. It's a tug-of-war between the long-term potential of their blue laser technology and the short-term reality of their burn rate. When we look at the broader sector, the momentum for industrial automation and specialized welding is actually quite strong. Companies are looking for ways to increase efficiency in battery manufacturing and 3D printing. NUBURU's business model is built on providing a solution that is faster and more precise than traditional infrared lasers. They essentially hold a key to the next generation of metal fabrication. But here is where the reality hits the expectation. Having a better mousetrap doesn't matter if you can't afford to build the factory. The market is currently valuing NUBURU as a research project rather than a commercial powerhouse. This is a common hurdle for firms that have transitioned from R&D to active production. Macroeconomic pressures are not helping. With the Federal Reserve keeping a close eye on inflation data, the risk-on appetite for stocks under $1 has almost vanished. Investors who used to find investment help through social media trends are now migrating towards safer harbors. You see this in the flow of funds towards things like Schwab Intelligent Portfolios or even high-yield Fidelity mutual funds. The liquidity is being sucked out of the microcap space and deposited into Magnificent Seven names like Tesla stock. This leaves companies like NUBURU in a precarious position where they have to perform twice as well just to get half the attention they used to receive. NUBURU's actual operations involve the design and manufacture of high-brightness, high-power blue laser technology. Unlike standard lasers that use the infrared spectrum, blue light is absorbed much more efficiently by metals like copper and gold. This makes their products essential for the electric vehicle industry, where copper welding is a primary bottleneck. Their business model relies heavily on high-margin hardware sales and long-term service contracts. While their historical performance shows a steady increase in patent filings and prototype approvals, the revenue hasn't quite scaled at the pace early investors anticipated. This lag is the primary driver of the current bearish sentiment. Looking at the future outlook, there are two distinct paths for this ticker. The first scenario is a strategic acquisition. A larger industrial player or a defense contractor could see the current valuation as a bargain for the underlying IP. In this case, the reality would far exceed the current pessimistic expectations. The second scenario is a continued dilution of shares to fund operations, which is the reality the market is currently pricing in. Every time the company needs a cash infusion, the existing shareholders see their slice of the pie get smaller. This is why it is vital to stay informed through reliable investing sites and maintain a diversified individual brokerage account. The contrast between what NUBURU could be, a cornerstone of green energy manufacturing, and what it currently is, a struggling microcap, is the definition of market tension. If you are someone who prefers online investing with a long-term horizon, you are looking for the point where the commercial adoption finally offsets the financial overhead. Until that pivot happens, the stock will likely remain a high beta play, moving more on news and sentiment than on fundamental earnings. This is why many people use a SoFi robo-advisor or Interactive Brokers trading tools to set strict limit orders, protecting themselves from the exact kind of 14% intraday drop we are seeing right now. In summary, the situation with NUBURU is a perfect example of why fundamental analysis must be paired with an understanding of market mechanics. The expectation was a steady climb based on technical superiority, but the reality has been a harsh lesson in capital management and sector-wide liquidity drains. We have seen how the pressure from larger names and the shift towards safe assets like Fidelity ETFs has left small-cap tech in the lurch. The company's core technology remains impressive and highly relevant to the future of manufacturing, yet the stock price is currently a reflection of financial stress rather than industrial utility. As we move forward, the key catalysts will be any news regarding a major manufacturing partnership or a significant restructuring of their debt. Whether you are checking your Robinhood investments or looking for investment help through more traditional Fidelity wealth management services, the lesson remains the same. Price action is the final arbiter of truth. NUBURU has a lot to prove to the institutional crowd before it can regain its former highs. The gap between expectation and reality is currently wide, and only consistent, profitable execution will close it. Keep a close watch on the trading volumes in the coming days, as a sustained increase in volume without a further price drop could signal that the selling pressure is finally exhausted. For now, it is a game of patience and risk management in a very unforgiving environment. The industrial sector is moving fast, and while NUBURU has the tools to compete, the clock is ticking on their ability to fund that competition. This is the reality of the current market. It is not enough to be smart or innovative, you have to be liquid. As you navigate your own online investment strategy, always remember that the market can remain irrational longer than you can remain solvent. Diversification into things like Fidelity IRAs or maintaining a balance of stable assets alongside speculative plays is often the best way to survive these periods of intense volatility. The current 51-cent price point is a major psychological battleground, and how the stock closes today will set the tone for the rest of the week. Ultimately, NUBURU represents a specific kind of opportunity and a specific kind of risk. It is a pure play on a very specific technology. If that technology becomes the global standard, the current price will look like a historical anomaly. If the company cannot bridge the gap to profitability, it will serve as a cautionary tale for those who focus too much on tech and too little on the balance sheet. This tension is exactly what makes the stock market so compelling and so dangerous at the same time. Stay sharp, keep your emotions in check, and always look for the reality hiding behind the popular expectations. The data doesn't lie, but the narrative often does. Monitoring your Interactive Brokers account or SoFi investing app for these shifts is the only way to stay ahead of the curve in this fast-moving environment. The story of NUBURU is far from over, but the current chapter is undoubtedly one of the most difficult in its history as a public entity. As the session continues, watch for any signs of a dead cat bounce or a genuine reversal. The intraday movement we've analyzed today is just one piece of a much larger puzzle, involving global supply chains, interest rates, and the future of industrial light. As we look toward the closing bell, the main takeaway is that NUBURU is fighting an uphill battle against both its own financials and a skeptical broader market. The initial excitement that surrounded its public debut has been replaced by a cold, hard look at its quarterly burn. For the self-investing enthusiast, this is the time to decide if the original thesis still holds. If you believed in the blue laser's ability to change welding forever, the technology hasn't changed, only the price of the stock has. If your thesis was based on a quick momentum play, the reality has likely already forced you to reconsider. This clarity is what separates professional traders from the crowd. Use the tools at your disposal, whether it's the Fidelity mobile app or the Robinhood stock trading platform, to execute based on logic rather than the hope of a sudden recovery. Authority in the market is earned by recognizing these moments of divergence and acting with conviction. The expectation of a quick recovery is a dangerous thing to hold on to without supporting data. The reality is what we see on the screen right now. Stay grounded, stay informed, and always be ready for the market to move in a way that surprises the majority. That is where the real edge is found. By focusing on the immediate intraday swings and the institutional activity that drives them, we can see that NUBURU is at a crossroads. The massive drop today isn't just a random fluctuation. It's a signal. It's a signal that the market is demanding more than just potential. It wants proof of concept in the form of cold, hard revenue. Until that proof arrives, expect the volatility to continue. This is the current state of play. It's professional, it's direct, and it's the reality of the situation. No fluff, no jargon, just the facts of the trade. If you're looking for more investment help, keep analyzing these patterns across different tickers and sectors. The same principles that apply to NUBURU today will apply to the next big mover tomorrow. Awareness of the gap between the story and the numbers is your greatest asset as an investor in this or any other market. In a world of noise, the price is the only signal that truly matters.